Integrated Industries Limited, their earnings for quarter one fiscal year 2026 are out. This company is a small cap company which is engaged primarily in the production or the manufacturing and selling of biscuits. So let's check out these earnings. Okay, so here are the earnings. These are for quarter one, again, fiscal year 2026. So, revenue from operations. Here we see the net sales or income from operations standing at around 249.78. All these numbers are in crores. So 249.78 crore rupees are the sales this quarter. Under the other operating income, we have 0.07 crores, bringing the total income to 250.73 crores. Here we also have a very small 0.88 crores of other income. This thing is other operating income and this is other income. So total, the revenue came out to be 250.73 crores. When we compare this to the quarter one of last year, that is 12 months back, here we have revenues of 140 crores, the total revenues of 140.14 crores. This is a growth of no joke, 78% increase in revenue year on year. 78% increase in revenue. Next, we see the costs, the expenses. The major expense is the cost of materials consumed or slash the cost of traded goods. So the material cost, the raw material cost is the biggest cost. Then we have the other costs like finance expense, depreciation, employee benefits expense. And overall, the profit and loss before tax and all that came out to be 25.61 crores for this quarter. Tax expense 0.84 crores, so very small tax expense, which is a thing to look out for. Bringing the profit and loss for the period to be around 24.77 crores. If we compare this to 12 months back, all right, 12 months back, here we see, yes, let's go for here. We see 24.77 crores, 12.98 crores 12 months back, bringing in profit growth of 90%. Here you can see profit growth was more, way more than revenue growth. So, okay, massive profit growth. Here we have some more stats below. The debt to equity ratio is an extremely small 0.01, meaning debt as a percentage or as a fraction of equity is negligible. Then the debt service coverage ratio. What is debt service coverage ratio? Which is EBITDA as the numerator and debt service. Debt service is paying off interest of loan plus the principal of loan you're paying that year. Okay, it's an important stat for what do you see? Measuring the credit risk, the credit health of a company. How much does interest or the debt itself affect the company, basically, or its income? So, debt service coverage ratio is 90.22, which is spectacular, nothing to be concerned about. And the interest service coverage ratio, which is EBITDA upon the interest payments made. And again, this is a ratio used to measure the kind of the financial health of a company or how much debt is an issue for the company, standing at around 802.11. That is the ratio. So EBITDA is 800 times the interest payments. So if these numbers are to be completely believed, then it seems that debt is basically nothing for integrated industries. Moving on below, we have if this revenue by segments or its revenue sources basically. Okay, so this 249.78 crores of revenue this quarter, 30 crores came from manufacturing of food products and 219 crores came from trading of goods. So this A part is small, 30 crores. Manufacturing of food products is the biscuits, mainly the biscuits or the cookies or whatever food it actually manufactures. Yeah, manufacturing done by itself, its own manufacturing plant. While trading of goods, what is trading of goods? This is third party manufacturing, where integrated industries will get the manufacturing of its products done by third party vendors, mainly in Malaysia, I think Malaysia and Philippines. Malaysia, Philippines companies, there are some companies there, it gets its manufacturing done from them. So majority of its revenue comes from this trading of goods. That is contract manufacturing, third party manufacturing. And as far as I know, this trading of goods almost entirely, a majority of it is exports. The revenue is coming from internationally, not from Indian sales, sales from other countries, but outside foreign countries. Then we come to the segment results or the EBITDA. Here you can see manufactured goods, all right, the food items, 2.37 crores EBITDA for sales of 30 crores, and traded goods EBITDA of 25.9 crores for 25.9 crores EBITDA for 219 crores worth of sales. So EBITDA margin for traded goods seems to be above 10%, which is interesting. And manufactured goods, the what do you say, the EBITDA margin seems to be slightly below 10%. All right, all right. Segment results, EBIT, again, majority of the EBIT, the EBITDA will come from traded goods because it makes up like around 87% of revenue, more than 80% of revenue from what I calculated earlier. Of course, majority of the profits will also come. Then we have the segment assets and liabilities. All right. So total assets of 617 crores. Majority of it, 385.3 crores, comes from traded goods, or the assets are for the traded goods segment, while 232 crores are for the manufacturing of food product segment. Then we have segment liabilities, which is also equals to 617.89 crores. Now, assets are equal to liabilities. The thing is, the liabilities here include two things. One is debt to like borrowers, but the major thing is the money it owes to its shareholders. Basically, for every company, right? If it has shareholders, then it owes money to these shareholders by default because they are the shareholders. So that also counts as liability. So a lot of these liabilities here are just money that the company just owes to its shareholders. Like real debt, like debt in the terms of borrowings from lenders and all that, is almost nothing. Is almost nothing for this company, basically. Then, yes, so that were the results for the company. 70%, 74%, 78% revenue growth, 78% revenue growth, 90% profit growth. All right, all right. Now we could end this here. One small segment, one more important information for this company is this. Now, this is the con call, the con call for February 19, 2020. Now, in short, what is a con call? A con call is basically a meeting held by the management of the company itself with its shareholders, where management will present the latest earnings and what's happening in the company, and shareholders can ask questions. In this particular meeting, we have two people from management. We have Mr. Saurabh Goyal, who is the Managing Director of Integrated Industries, and we have Mr. Vikas, who is the Vice President, Finance of Integrated Industries. And so important things were said in this con call, very important things. Now, one is about the profile of the company itself. To go a bit, let's say, detailed into what it actually does. Now, under this black marker, we will read the lines. Integrated Industries Limited is presently engaged in business of organic and inorganic food products, bakery products, and other food products. Okay. In 2023, it's important, the company acquired a successfully running biscuit manufacturing plant with a capacity of 3,400 metric tons per annum at Neemrana, Rajasthan, and its subsidiary Nurture Well Foods Limited, which which manufactures biscuits and cookies under the brand name of Rich Light and what is that? Rich Light and Fun Treat. All right, all right. So 2023, the company acquired a successfully running biscuit manufacturing facility. All right. Capacity 3,400 metric tons at Neemrana, Rajasthan. All right. All right. And the subsidiary is Nurture Well Foods Limited, which manufactures biscuits and cookies under the brand name of Rich Light and Fun Treat. So these are the brands, Rich Light and Fun Treats. Okay, moving on here, the company's management. Who is this? This is Mr. Saurabh Goyal. Yes, this he is the what was he again? Hold up. Who was Mr. Saurabh Goyal? So Mr. Saurabh Goyal was the managing director. Yes, yes, yes. He's the managing director of the company. So the managing director of the company has said this statement, which is very important. This is for the future growth of the company. So the current manufacturing facility at Neemrana is 3,400 tons, right? However, they have another manufacturing facility which they're making in UP. Okay, they're making in Secunderabad, UP, that will start commercial production by end of 2026. And the capacity of this new plant that will start by the end of 2026 will be 5,000 tons. Be 5,000 tons. All right. So this plant will more than double their current manufacturing facility. 3,400 metric tons. This will add 5,000 more tons to it, manufacturing facility, to bring the total to 8,400 tons will be their new manufacturing facility, more than double. Then he makes a statement, and plus we get a lot of manufacturing where we get products developed from our vendors and we market it under our own brand name. So what was this? This was their traded goods. Remember that segment, traded goods, contract manufacturing, trading of goods segment. This is it, contract manufacturing. And news, the main important thing here, the new facility they are gonna establish by at UP, the capacity will be 5,000 tons, and the focus of this new facility will be on premium products, high margin products. So if they succeed, they will increase their, what do you say, profit margins a lot. Because again, this will cater towards high margin products. Then another important thing said by management is now this 525 crores figure you see, this is 9 months of revenue. The revenue for this year was 720 crores. This is the 9 months revenue only. Okay, so out of this 525 crores of turnover, that is revenue, approximately the entire sale is for bakery items only. And if you talk about exclusive biscuits, around 425 crores, which is around 80 to 85% from biscuit segment. So 80 to 85% of this 525 crores of turnover came from biscuits. So main product there is biscuits. The main product turns out to be biscuits, exclusively biscuits. Then there is a statement said by Mr. Yes, confirmed by Mr. Vikas, who is the vice president of finance of this company. 70% of revenue comes from outside of India. Majority of revenue of this company comes from outside from India, and that is from Dubai subsidiary, and Nurture Well Foods Limited, their LLC, their subsidiary Dubai company. Majority of revenue for the entire company, Integrated Industries, comes from exports. So, export-driven company, and here they gave some more confirmations. Okay, important. Here are some guidance, some targets. The company says, Mr. Saurabh Goyal said, who is the again managing director, fiscal year 2027, the revenue will be 1,200 crores. They estimate it to be 1,200 crores, currently 720 crores. So they expect it to reach to 1,200 crores. Then, here again, the management said, in terms of profitability, we are expecting our profits to go by at least 30 to 40%, because the new setup, that is a new manufacturing facility they're coming up with here, has better margins or increase margins than an existing because they are premium segments only. So this manufacturing facility will have better margins because it's for premium segments only. So how much more profit are we expecting? He says that operating profit margin will be close to 15 to 17%, and current operating margin is 9%. So they expect it to go to 15 to 17%. And then one last statement that I needed to show, which for some reason I can't find it right now. How can't I find it? I just had that statement with me, but I am having trouble in finding it. Hold up. Just 1 second. It is about the growth numbers and how much revenue they're expecting. This is basically revenue guidance. And I it was right here, I swear. This number was right here, and I can't find it. Amazing. Amazing. Why can't I find it? Okay. So from what I remember, they expect 70% revenue growth in fiscal year 2027. That's what's the statement. I hope I can find it. But from what I remember, in fiscal year 2027, the management, okay, we can hold this to them. They said that revenue growth will be 70%. Okay, 70% in fiscal year 2026. I hope I can find that statement. Where is that statement? Uh, it should be right here. Come on. I just saw the statement. They specified revenue growth for fiscal year 2026 also. I believe it was 50%. Oh my God, I can't find the statement. Amazing. Amazing, amazing, amazing. All right. Yes, I can't find the statement. Brilliant. Brilliant. Okay. The substitute for the statement is this in this. Made by Mr. Vikas, who is again the Vice President of Finance. So if they do not achieve it, it's their fault. So see, fiscal 2025 we will be close to 700 crores in revenue. They crossed that, they reached 720 crores. We will be closing at and going forward in fiscal 2026, where we are planning, or rather, we are well on course to touch 1,000 crores in terms of total revenue. So 1,000 crores in revenue by fiscal year 2025 and 1,200 crores in revenue in fiscal year 2027. Sorry, 1,000 crores fiscal year 2026, 1,200 crores fiscal year 2027. Major growth plans, very ambitious growth plans, 70% profit growth, sorry, revenue growth. Expecting the profit margins, the operating margins to increase from 9% to 16 to 17%. So that's it. We have a nice day. Nice day.